Afternoon, ladies and gentlemen. Thanks for dialing into JSPL's 2QFY21 earnings call. We have with us the management of JSPL to discuss the results. I will now hand over the call to Nishant Baranwal, Head of Investor Relations, to take the call forward. Over to you, Nishant.
Thank you, Amit, and thank you, Aisha. Good day, everyone. We welcome you all on this call to discuss the 2QFY21 financial results for JSPL. Today we have with us our Managing Director, Mr. V.R. Sharma. Also, it gives me immense pleasure to introduce you all to our Chairman JPL and Director Finance for JSPL, Mr. Akhori Sinha. Just to give you a brief on Mr. Sinha has more than 4 decades of experience with the banking industry in India and the US, in public sector and the private sector, including foreign banks. He's also headed the Royal Bank of Canada in India for over 12 years. Mr. Sinha has vast experience in banking, international finance, debt markets, ratings, and a lot more. So with that, I would request our MD, Mr. V.R. Sharma, for his opening comments, please. Sir.
Good morning, ladies and gentlemen. The Q2 had been excellent in the history of JSPL. Fortunately, with the blessings of everybody and with the market support, we could achieve ever highest EBITDA, ever highest sales turnover, and ever highest production. So this was an excellent quarter. And H1, if we conclude, then H1 we could do 3.5 million ton of production, and H2 we are in line as per our earlier declaration. We will be doing another 3.8 million ton in H2, and that will be about 7.3 million ton, maybe a little more. We will try to reach to 7.5 million ton as a whole. So company is doing extremely well. Market is supportive. We have done a lot of re-engineering in our working. We could reduce our costs. We could increase our EBITDA level. The demand has picked up. Auto sector has picked up. Infrastructure sector has picked up. Thanks to Government of India, and they are spending a lot of money in infrastructure projects, especially for the pipelines, water pipelines, cryogenic storage tanks, shipbuilding, Indian Railway. So these are some of the areas where we are reaping the benefit. Then we have first time in the country, we have made a import substitute in rails that is called grade 1080 head hardened rails for metro rails, and 1175 HT that is for Indian Railway. We are also now approved by RDSO and Indian Railway to be a regular supplier to them. And already we are approved by metros, and metro we already started the supply. So Indian metro users, also the railway, Indian Railway, they are getting immense benefit associating with us, because we are delivering material within 6 to 8 weeks time, whereas they used to import and they used to open letter of credit for 6 months in advance, and then there was always an issue that minimum order quantity should be 5,000 ton. We are delivering material to their sites, even 500 ton material we are delivering. So it is like Amazon concept. So whatever people need, we are in a position to supply on time. So you have seen the EBITDA margins are 31%. The overall on console basis, we could do 2,702 crores of EBITDA, and on standalone basis is 2435 crores. So which is a record. Perhaps we are the highest EBITDA generated today in the steel company, in the steel industry, and we are the lowest cost producer in the whole world. And this is what we want to maintain. The company is doing extremely well at labor front, at employees front. We are very much comfortable. We are perhaps the only company in the country who have not deducted salaries during COVID time, and we have paid people on time. We are not retrenched on anybody, and we could take care of the society, we could take care of ourselves, and we could manage and we could steer the organization in a right way. Initially, in the beginning of this year, we were dependent on exports because domestic market was closed. So we had export about 1.35 million ton in first 4 months, that is April, May, June, July. And after that, we have tapered off the exports. And now earlier it was 70 to 72%, came down to about 56%, came down to 45%. And now in October it is only 32%. And in November we'll be just exporting about 20% of the total produce. And that we will maintain till the end of the year. And this is because the domestic market is pretty good. Earlier for exports we were primarily selling semis. Now these all semis are being converted into finished goods, value-added goods, and we are not selling semis at all now. So whatever we are exporting, like plates in exports, we are doing to Europe, then beans to Europe as well as South Africa, rails to the adjoining countries like Sri Lanka and Bangladesh, and we are also exporting to Saudi Arabia for the TLT, that is transmission lines, and that is specialty high-strength steel angle irons. So that is our major market now. So we'll continue reaping the benefits of the value-added steel, and this is what our aim is. So coming back on the overall plan for the year, 7.3 million ton, but we'll be trying for 7.5 million ton as against of 6.5 million ton last year. So this will be about 18 to 19% of growth, which is a phenomenal growth. I'm also pleased to inform you that in the whole world, during COVID time, there was a negative growth except for the China. China had a 6% positive growth, whereas GSPL had 11.4% positive growth. In India, all of the steel mills, they were at a negative growth, but we were at positive growth at that time also. So I would say that company is doing extremely well. So is the power business. Power business is just getting back on the track, but the solar, wind energy and hydro, they are still very active, and the state electricity boards, they have not come back to buy in full. So we are just waiting. The government of India, they releases more funds, and state governments, they try to buy more electricity. Then I think it will be good for the nation. Now you are seeing there is economical revival in the country. Today news is that the India as a whole could do more than 1 lakh crore of GST collection, which used to be the maximum peak was 1,14,000 crore. I'm sure in the Diwali month of November we'll cross 1,10,000 crore. That means the money is changing hands, and the purchase power is increasing. The another good thing is that the first time in the history of the country, the ATMs withdrawal are lower than the payments made to the cards. So that means the e-economy and the plastic economy is working very well. That shows the people, they have the money and they are interested in spending money. So the spend management is quite lucrative now. So we are expecting that the steel consumption will further go up. Then at the international front, I would like to inform you that the coking coal prices have gone down from $128 to $104 FOB in last 30 days time, and that has lured us to book our orders for coking coal. We have done a forward booking up to February, and we are expecting that the price will be hovering around about $105 to $110. And the moment the prices they go up in the month of December or maybe early January, so we will reap those benefits because we have already booked the orders up to purchase orders. We already placed the orders up to February consumptions. So this is all what we are doing. The coal gasification unit is doing very well, and so is the DRI. And we are now looking that the coal availability by Government of India, the Mahanadi coal field as well as Coal India, that has increased. The coal prices have also come down thanks to Mr. Modi, our Honorable Prime Minister, who has asked them to produce about 1.5 billion ton of coal as against of 800 million ton as of now. So if they produce 1.5 billion ton, then the benefit will definitely come to the steel industry, and especially to us, because we are the only company today in the country having a coal gasification unit. The other area is the coal mining. We are trying to buy coal mines if it is possible, but otherwise, if it is not possible, then still we are comfortable. Then the other area is the iron ore. Iron ore today, fortunately, we are at a location in Odisha and also Chhattisgarh. So for us, the iron ore is not in shortage. We are doing very well. We are getting material from all over the country. We are on iron ore mines also, as you know, Tensa mines. That is giving us about 3.3 million ton. We have more than 7.5 million ton material lying in the premises of SMPL, that is Sharda Mines. And this there was a little turbulence in last 1 week, but I'm sure that from today the dispatch code that will be released so that we can continue our operations and we can bring our material which is lying, which was cleared by Honorable Supreme Court in the month of January end, and we could start our operation from February end. So we have about 7.5 million ton. So this 7.5 million ton in this financial year we'll try to take out. We consume about 1 million ton from that stock per month. So hopefully in next 6 to 7 months time, this whole 7 million ton will be back to Jspl, which is already duty paid, royalty paid material. So I think things will be better. We consume about 12 million ton iron ore in a year. Out of that, 3.3 million ton will come from our own Tensa mines. 7.5 million ton we will be bringing from one of our old stock, which is stocked in the premises of SMPL. Balance about 1.5 to 2 million ton. We have so many other suppliers in the area. We can buy. There's no problem. So at railway front, the government of India has done a wonderful job. That rakes are available on call. That is something very good. So we are in a position to move our material without any pile up of inventory. So this is all from my side. And while we discuss during the day, in the next 1 hour, if there is any question, I'll be happy to reply you. Thank you so much.
Thank you very much.
Now I will pass the call to Mr. Sinha.
Yeah, hi there. Good morning, ladies and gentlemen. You heard Mr. Sharma, our MD, and our flagship company, Jspl, continues to do exceedingly well. But I'm afraid that I can't say the same thing about our power company, JPL. We are doing okay, but not what we wanted to. And the power sector in the country, as all of you are aware, continues to be subdued. And there is hardly any gap left today between the availability of power and the requirement of power. In fact, this is not the scenario today. I mean, this trend has been continuing for the last 1 year now. Country produced, close to about 1,300 billion units in the last year. And the demand was close to about 1,290 billion units. So in fact, there was a time when the supply exceeded demand. And in this half year ending September, India has already produced about close to 673 billion units. And the demand is not going up. Now this has put pressure on the selling price. And if we look at the selling price at our RTC power exchange, you will see that the average price has been hovering around 2 rupees 45 paisa per unit, 2 rupees 50 paisa per unit. And this has impacted not only our company, but almost all the generators across India. And that is also the reason that why, if you look at the overall installed capacity in India, which is approximately about 373 gigawatt, last year, I'm talking September to September, hardly addition of about 10 gigawatt has been made. And out of this 10 gigawatt, 3 gigawatt has come from thermal coal sector, where the capacity has gone up from 203 gigawatt to 206 gigawatt. Solar has contributed about 5 gigawatt from 31 to 36 gigawatt, that is the total installed capacity country has. And 1 gigawatt each has come from wind and hydro, where hydro has gone up from 45 gigawatt to 46 gigawatt. So altogether, the situation continues to look quite grim. Nonetheless, JPL did give a good EBITDA, and I will come to the financial figures later. And I have to wear another hat as Director of Finance. This was the hat I was wearing as the Chairman of JPL, and I have to wear another hat as Director of Finance of JSPL. So I'd like to first go through the financial parameters, financial results of JSPL, followed by the financial results of JPL. So coming to, just adding to a little bit more to what our MD Saab said, you are aware that, the JSPL recorded a turnover of 8,677 crores on standalone, which is 29% increase on quarter-on-quarter basis. And EBITDA went up by 33% and stood at 2,435 crores. And the PAT went up from 505 crores to 998 crores, recording a growth of almost 98%. So I must say that, the results have been spectacular. And the EBITDA this quarter has been ever highest in the history of JSPL. We never had this kind of a EBITDA before. And this becomes more important because, in these trying times when our peers are nowhere near us, so performance is concerned. In these trying times, our EBITDA, our PAT, our turnover, they have shown phenomenal growth, literally phenomenal. So I really feel proud about this, and I don't want to sound immodest, but this kind of a performance, not only in India, we have not seen worldwide this quarter. Coming to sales volume and standalone, like what our MD said, that it went up by 24%, and we recorded a sales volume of 1.93 million ton. And on a consolidated level, it stood at 2.40 million ton. So for the consolidated turnover is concerned, it stood at 9,804 crores, showing a growth of 24% on Q1Q basis. And EBITDA stood at 2,702 crores, showing a growth of 23% on quarter-on-quarter basis. That went up from 291 crores to 903 crores on a consolidated basis. So you will agree that, and if you look at our peers, I am proud to say that we are far ahead of them today. Now, if we compare the same results on year-on-year basis, so coming to JSPL, our EBITDA went up by 94% from 1,255 crores to 2,435 crores year-on-year basis. So Q2 21 and the corresponding quarter last year, the figure I'm comparing. And our JPL, there we are almost at the same compared to what we were in the Q2 last year. In fact, there is a very minor, a dip in our EBITDA, just 1%. On the overseas front, it is not looking very healthy at this point of time, but nonetheless, we are taking measures to divest our overseas assets, like, the market is aware. We have already taken the steps so far Oman is concerned. And down the line, we have envisaged that gradually we'll keep divesting our overseas assets and we'll focus on our core strength, which is steel. So this is what I have to say about the JSPL. And coming to JPL, give me a second. So for JPL is concerned in quarter 2, we produced 2,744 million units and we sold off 2,550 million units. I'd like to give you a quick classification of where did we sell our. So, and the PLF also went up, and yeah. So, like what I said, that we do not have much to show upside on the JPL front, and whatever PPA we had close to about 1,080, that we hope that will continue to remain same, because the PPA which we had signed earlier did not went through. We could not sign. The new PPA also, we are not very hopeful that when this will be signed, or because already 7-8 months have passed since we won the bid. So this is the overall scenario about JPL. And now we'll be open to questions. So Nishant, over to you now.
Thank you, sir. We would open the lines for question and answers. My humble request here would be, please limit your questions to one. And also, kindly, I'll urge you and request you to ask more strategic questions. We at IR are always there to provide you with the data. Operator?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from Edelweiss. Please go ahead.
Thanks for taking my question and congratulations for a good set of numbers. My question is with respect to debt. If you can walk us through how the net debt level was reduced. I know there is a waterfall chart, but apparently it is not very clear. So if you can walk us through that net debt reduction level, and also why interest cost went down significantly in this quarter, both YOY and QOQ.
Yeah, thank you very much. We started with about 35,000 crores of opening debt in the company, and after divestment, the debt comes down to 29,500 crores. We already paid in this particular H1 about 2,600 crores to the banks. We have planned to pay another 2,400 crores in the next H2, and once we do it, then finally we'll land somewhere about 24,500 crores by the end of the year or opening of the next year. So this is what our plan is. Interest rate has been reduced. If you see that overall we could negotiate with the banks, wherever we had interest more than 2 digits, so we could find out and we could negotiate with them to bring it down to less than 2 digits, I would say less than 10%, somewhere about 9% also, 9.5% also. And we'll continue talking to the bankers to reduce it further. We are also looking that our rating should be improved further after seeing all these results of Q2, and I hope I have replied to your question.
Sure, sir. I have a follow-up, but I will come back. That's okay.
Thank you.
The next question is from the line of Prashant Kumar from InCred Capital. Please go ahead.
So thanks for the opportunity. So my question is to do with our core assets and non-core assets.
Sorry to interrupt. Mr. Kumar, your audio is not quite clear. We are not able to hear you.
Hello, is it better now? Hello?
No, sir, the audio is still bad. I would request you to please come back in the question queue. The next question is from the line of Rahul Jain from Systematics. Please go ahead. Mr. Jain, your line is in talk mode. You can go ahead, please.
Hi, sir. You gave a guidance for the volumes for the second half. So how should we look at for the next year? Because I think we are achieving now rated capacity, and as a group, we have focused on deleveraging. And so should we see that what you can add is only through debottlenecking?
No, I'll tell you, we will be ending somewhere about 7.3 to 7.5 million ton by the end of this particular year. And, we are not doing any capex. And we have still some margin. Steel is an area where the section weight sizes, they play a very vital role. Like we have 5 meter wide plate mill. If you produce more than 3 meters, that is more quantity, that means we can increase the capacity. We are today the largest plate manufacturer in the country. And similarly, the sections like angle iron, channel, all these sections, when we go for the heavy sections, we can increase the production. So what we are doing, we are now working that which are those products which can definitely bring higher EBITDA, and simultaneously we can increase the productivity. So our blast furnace like in Angul is running now at 10,000 tons per day. We are going to produce about 11,000 tons plus per day with little more modifications. And since we are not adding any capex, so whatever we will do by excelling with the existing operations. So this is what our game is.
No, so some color for next year. I mean, you think that
we'll be touching about 8 million tons.
Okay, thank you so much. Yeah.
Thank you. The next question is from the line of Kamlesh Bagmar from Prabhudas Lilladher. Please go ahead.
Sir, just going through your loan balance sheet, if I see the trade payables, so it has come down by roughly around 600. If I see other current liabilities, that has come down by roughly around 800 crores. Despite the fact that like our book has gone up. So I'm really surprised at how the papers and the current liabilities have come down. In current liabilities, you have a component of customer advances. So what has been the movement in that?
Kamlesh would request you to repeat your question. There's a lot of distraction.
We could not understand the question fully. I think there's some technical problem. I request you please repeat it, or otherwise we can go to the question and come back later.
So I'm saying that in the other current liabilities, the figure has come down by roughly around 800 crores as compared to the March 20 figure. And even if we see the trade payables, that has also come down by roughly around 600 crores as compared to the March levels. So why there has been such a sharp fall that has resulted in our debt numbers not going down that significantly?
So Kamlesh, just to repeat your question, we understand clearly you're asking about the trade payables going down by 600 crores.
Yeah.
In the first half.
Yeah.
So basically, Kamlesh,
other current liabilities.
Right. So Kamlesh, basically what we have done is that whatever trade payables we were there, we have made repayments or supplied materials against those things. And therefore, the trade payables have come down. The endeavor will be to bring them down sequentially quarter after quarter.
And about liabilities?
Yes, please. Next question, please.
Thank you. The next question is from the line of Subhadeep Mitra from JM Financial. Please go ahead.
Good afternoon, sir. My question is pertaining to Jindal Power. Just wanted to get some color on pilot 2 PPA status. I understand that we have two branches of 215 megawatt and 105 megawatt that was bid for. So if you can just give us an update on that.
Come again, please repeat your question. Actually, the voice was not very clear. I understand that you are asking the PPA for the rest of the year?
Correct. I'm asking with regard to the pilot 2 PPA status, what is the color, what is the status of the pilot 2 PPA signing?
Yeah, I'll tell you. We bid for 420 megawatts in February 20, and we got that 420 megawatts. The aggregator was PTC, but somehow or other, because there is not much demand from the DISCOMs, so we have not been able to sign the PPA. And chances are not bright because it's the second time the same story is getting repeated. If you'll recall, we had signed a 515 megawatt PPA when the NHPC was aggregator in 2019, which could not materialize, which we could not sign, and that was shelved off. And the another under Pilot 2 scheme, 2,500 megawatt was put for sale, and the aggregator was PTC, where we got 420 megawatt, but still no PPA has been signed. So I do not see that this is going through in the near future. So we are not very optimistic about it.
Thank you.
Next question, please.
The next question is from the line of Preet Nagarsheth from Wealth Financial Advisors. Please go ahead.
Yeah. Can you hear me?
Yeah.
Yes, sir.
Okay. Can you give us an impact on the iron ore mine that you had won and on which some show cause notice has come out? Could you give us a picture of what is going on there and what the trend is?
So thank you. Yes, it is a question which I was expecting from any one of you. You see, this mine name is Gwali Mine. Actually, we won this mine, but unfortunately, when the possession was likely to be given, we found that there is a mismatch in the physical possession and versus the drawings. So we discussed with the government of Odisha that you please rectify it, because we cannot take some liability tomorrow that we start functioning the mine and then finally somebody comes and stops us that no, you are illegally you are doing the mining. So this is the reason we have raised our concern to Odisha government, and of course they have given a show cause. We already replied that our reason is this: either you correct it or we cannot take it.
Okay. So what will be the outcome of this? Do you see the mine going back, or do you see that the corrections happening and then Jspl being able to use that iron ore?
Actually, we have taken the opinion of various legal authorities and legal advisors, and government of Odisha is also taking. It is very difficult for them now to re-correct it, because for all last 15-20 years, this was going on as it is without any map. So that there is a mismatch in the map, in the total mining area. So because upside there is some forest, downside, the equivalent to forest, they have started mining the downside, which was not acceptable to us because it's not as per the layout. So this is the reason. Now it is up to the government, because we cannot decide on behalf of government. If they rectify it, welcome, then we will take. If they don't rectify, then they have to offer us some alternative.
Okay. Thank you.
Thank you. The next question is from the line of Jimesh Sanghvi from Principal Mutual Fund. Please go ahead.
Hi, sir. Sir, if you can throw some light on the next phase of growth for the steel business. I understand you guided that probably next year we are targeting around 8 million in terms of volumes. But considering that we are deleveraging our balance sheet, and probably next year also the iron ore sourcing might get exhausted at Sardar mines, like the low cost ore that we have already paid for. How should one look at this steel business in particular for next financial year, both in terms of iron ore sourcing as well as kind of any capex that you might be considering in business? If you can throw some light on that from a longer term perspective.
Yeah, thank you very much. Very right question in today's context. The issue is, first of all, iron ore availability is in abundance today in the country. There were some problems because of the very heavy rains and mining was disrupted. The other problem was because the iron ore mines have changed hands and the new promoters have come, and it takes a little time to ramp up the production. The other is because the old iron ore owners, mine owners, they are holding the stock. Now they are clearing their stock because they have to clear the stock within 6 months' time. So that has put some problems in the country. But since we are in Odisha and also in Chhattisgarh, so we didn't face this problem. We have Tensa, our own mines that produces about 3.3 million ton. We have more than 7 million ton of stock lying in the premises of SMPL. We consume about 1 million ton per month. So out of 12 million ton every year, so we are covered for about 10 million ton, and balance 2 million ton we can buy from the vicinity of our plants. So should not be any problem because Odisha Mining Corporation, OMC, we have a MOU with them, and they are ready to supply whatever quantity we want to buy. And there are some private miners as well, those who are in the very close proximity of our plants, so that we can bring the material at a very low freight cost. So this is what we are doing now.
So basically you mean to say that once the Sarda ore and everything is over, the 7 or 8 million ton which is lying, probably we will be largely dependent on merchant ore sourcing, right?
Yeah, you're right. This is the reason we are trying to acquire another iron ore mine, and this is the reason we participated and we got this Gwali mine. But unfortunately, because of technical reasons, we couldn't start it. And I'm sure government of Odisha will definitely consider it, and they may rebid it, and with a correction in the map, or we'll try to participate in some other mines which are likely to come for the auction in very short time. And since we have been maintaining our production in the last 6 years' time when the SMPL was not functioning, so it didn't impact our business. So our business will continue. There is no issue at all, and there is no shortage of mines, no shortage of iron ore. As far as the overall production is concerned, the growth in steel industry is likely to be more than 5% year-on-year basis, and we will not be surprised if the growth goes a little more than 5%. And Jspl has done a growth of 11.4%.
Thank you. Jamesh, we would request you to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. The next question is from the line of Chintan Shah from Investec. Please go ahead.
Hi, sir. Thanks for taking my question. So I just wanted an update on Sarda mine, basically on fresh mining front. What's the legal status on that? And suppose, if possible, the fresh mining doesn't start and we don't have access to inventories, then what is the backup plan for that?
Yeah, thank you very much. There was a decision by Honorable Supreme Court in the month of end of January. After that, SMPL, they started their operations, and it's going on very well. Barring some issues in last 2 weeks' time, when some local authorities, they visited the mine and they have advised them, and also they all issued a show cause that how to stack the material. So, those things I'm sure SMPL must be taking care, and we are not impacted because of this. They have more than 20 customers, so we are one of them, and these are the normal issues in any mines, and since India is a very large economy and always minerals is in a very hot talk, so this happens. There's no problem. I'm sure this will be resolved very soon.
Okay, thank you. Sir, if I could squeeze in one more question, if you can provide an update on basically when can we expect Oman full and final sale, timelines on that, and if there are any procedural or legal hurdles that we anticipate or there are currently?
Yeah, my colleague, Mr. Nishant, will reply you. Just a minute.
Sure. Hi, Chintan. Thanks for asking that question. I think in our initial estimate, we did think that we'd be able to do it a lot earlier. But as you know, a transaction of this size does take its time, especially in these COVID times. So I believe there are no legal hurdles or anything that are there. The only last few approvals are to come, and therefore we believe we should be able to complete this within the third quarter.
Thank you. Chintan, we would request you to please come back in the question queue for any follow-up questions. The next question is from the line of Gaurav Rateria from Morgan Stanley. Please go ahead.
Hey, thank you for taking my question, sir. Sir, two questions. One is any update on the status of refinancing of the JSPL debt, and would you have permission from the Indian lenders to transmit money overseas just in case if it is not getting done by March? And second question is more on a strategic line. At what point in time or at what debt levels would you like to reconsider the capex or the expansion plan for JSPL steel operations? Thank you.
Sure. Gaurav, let me take your first question, which was regarding the refinancing, as we've already said. So first of all, you'd be happy to know that in the past 6 months, we've paid more than $200 million of overseas debt. Just pointing that out because the March repayment that you're talking about is just $230 million. And these 6 months are the better half for the steel industry in the country. And therefore, we do not foresee any problems in paying up the $230 million that's upcoming in March. Having said that, we've already spoken to the markets and we have pointed out that we would be looking at refinancing it through a USD bond deal. It is in the works, and as and when we advance, we're going to come forth. If that answers your first question. If you would repeat your second question, please, Gaurav.
Capex. The second question you have asked, I think, for the capex in the steel plant. Our board has taken a decision not to invest for the expansions till we bring down our overall debts. So our first aim is to bring down debts to a very reasonable level, about 15,000 crores, which is likely to come by 2023 as per the today's plan. And once we are working on this and we bring down our debts by below 15,000 crore, then only we will think for the next capex. Otherwise, we will not think for the capex.
Thank you, sir.
Thank you. The next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good afternoon, sir. Sir, this I see in your cash flows that you have extended somewhere around 1,300 crore soft loans to your subsidiaries. So can you just explain which subsidiaries we have given this loan, and after Oman hive off, how would this figure would change?
So, Vikas, this is a data question. I would urge everybody to please ask more strategic questions. These can be taken up by the IR team separately. Just for your question, Vikas, like we said, we paid off debt in Mauritius, and this was extended to Mauritius for the payment.
So with Oman going off, how this situation would change? Will we get this money come back, or it would get adjusted against something?
Because this was for payments in Mauritius and Australia.
Okay.
Sure.
Thank you.
Thank you. The next question is from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Yeah, for numbers overall operational.
Sorry to interrupt. Mr. Chheda, the audio is not quite clear.
Can you hear me now?
No.
Hello?
So you can go ahead, please.
You can hear me now?
No, sir, not very clear.
Hello?
Sir, the audio is not very clear. I would request you to please come back in the question queue.
Yeah.
The next question is from the line of Vishal Chandak from Emkay Global Financial Services. Please go ahead.
Yeah, thanks. Am I audible?
Yes, sir.
Yeah. So my question was with respect to the Guwahati mines. We have bid at a premium of 144%, and since the time we have bid for the mine, the iron ore prices have run away by about 1,000 rupees per ton. So how do we plan to, in case the government of Odisha rectifies the defects in the mining plan and the maps, and we still end up owning this mines, how do we plan to bring down our overall iron ore cost? Because when we compare to the Sarda ore coming to the Guwahati mines ore, that would be a quantum jump in the cost of iron ore. And if the iron ore cost is going to remain the same, what kind of a differential do we see?
Thank you very much. We put this bid on the table after having it a very, very good due diligence and after considering everything. But the point here is, it's not a matter of cost or premium. It's a matter that legally can they rectify it or not. We feel that they cannot rectify and they have to go for rebidding. This is one. Number two, In case they rectify, then we have a very comprehensive plan to transport the Gwali mines material through pipeline, that is slurry pipeline, and which is going to make us very, very competitive in terms of cost of iron ore to our steel plants. I hope I replied you.
Sure. Thank you very much.
Thank you. The next question is from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
So I just had a question on, the Sharif divestment. So the entities that are buying this, Templar and Vulcan, so we would not be extending any advance to them, right? So they would be funding this totally from their own sources of, funding. Just wanted to clarify that.
Yeah, our CFO and our Director of Finance, Mr. Sinha, is going to reply on this.
Yeah, what you said is absolutely right. We are not funding. This is coming to the company from its own resources. So JSPL doesn't have to do anything with this funding.
Sure, so because I think, in the Sharda mines case, I don't know whether my understanding is correct that we've extended an advance to them, and against that we get the raw material, right? So as we lift iron ore from them, we are adjusting the advance against that. Is that a correct understanding of that?
I think you have taken there, Pallav. So, like we've always said, that 12 million ton that belongs to JSPL, there is no advance that belongs to JSPL which was paid for earlier. The advance, like the adjustment which you're talking, we are buying from SMPL and other miners, and wherever we've extended advances, we generally adjust that towards it.
Sure. Yeah. Okay. Thanks.
Thank you. The next question is from the line of Sachin Roy from B&K Securities. Please go ahead.
Yeah, hi, sir. Good afternoon and congratulations for the great set of number. I have only one question, sir. That is, if you get the coal asset and how that will improve the working of power business.
Yeah, see, if we get the coal mine, our coal cost will come down. Right now we have secured about offtake of 3.1 million ton of coal, which is kind of beneficial situation. I mean, a good situation for us to be in. And if we get coal mines, probably our coal cost will come down further. So right now we have about close to 1.77 per kilowatt coal cost. And we expect that if the coal mine comes and we start doing the coal mine, then it will lower our cost. How much exactly, we are not in a position to pinpoint, but it will definitely come down.
Okay. If you don't mind, I just want a follow-up question. Yeah. Sir.
Go ahead.
Yeah, actually, I have one follow-up question. That lastly, you mentioned that if the Gwali mine came into place, then the premium that you are paying, that 144%, that will compensate, but by the slurry pipeline that you are going to come in. So, what is the magnitude? What is the amount that will compensate with that premium if you convert that transportation by slurry pipelines and all?
You see, the iron ore, the iron ore is today, if you see, is available in abundance, number one. Number two, if we compare with the international prices of iron ore, Indian prices are still very low. So we are not facing any challenge, and we don't foresee any challenge in times to come in the country, because we have more than 20 billion ton of iron ore in this country. So the slurry pipeline give an advantage of at least minimum 1,100 rupees a ton. So which is a substantial money at a product of having 4,000 rupees per ton of value, and if you get 1,100 rupees just on the transportation advantage, then you can imagine it is around 25%, so there is no problem at all.
Thank you. The next question is from the line of Bajraj Nahar from Mini Consultant. Please go ahead.
Yeah, thank you. I have one question. In your earlier presentation, you have described that you have 3 mines in Africa regions, and quality of that, I don't know, is really the world best quality. When those mines are likely to be operational? Thank you.
Yeah, thank you very much. You know, iron ore mines, hello. So these are the magnetite iron ore mines, and these are really is a very good ore. But you know, there are 2-3 things in it. One is today the situation is the India growth story. Till yesterday, it was not India growth story. Yesterday means in the last couple of years. But now the country's focus is on India growth story. Government is supporting, and we are going to produce in this country and consume 300 million ton steel by 2030. Now, this 2030, 300 million ton means the gap today is about 160 million ton capacity to capacity. And somebody will have to produce this 160 million ton to bridge the gap in 10 years' time. And as you know, that steel plants take about 5 to 6 years' time to start production. So today, what our aim is that by 2024-25, we should start working on the new plant or the capacity buildup if we are successful and if we reduce our debt level. And, our main aim will be to bank upon the Indian iron ore and to produce more and more steel. As far as the Africa is concerned, these 2 mines are very good assets, and the market price is also very good today. Iron ore is about $110 to $112 a ton in China, C&F. So we are looking some partners who can start these mines and take the material to the rest of the world instead of bringing to India. So this is what in our pipeline is.
Yeah, just one more point, follow-up point that in my assumption that if you can, because your distance from the port in one of the mine is only 90 or 100 kilometers, so the cost of your ore, even to India importing from those mines, will be less than the premium you are going to pay on the auction money. So are you considering like that on a war footing basis, or just a normal basis you are going on?
Yeah, we have worked out. This is the reason we did this bidding, and everything is on paper, everything is well calculated. If we transport iron ore from Odisha to our Angul plant by slurry pipeline, which is now talk of the town, the Government of India is supporting, the Indian Railway is supporting, giving corridor, and Indian Highways Authority, they are also giving corridor. Our pipeline layout is approved, project is approved, and we are going to start this project as soon as there is a clearance or there is some light at the end of the tunnel for the mines. So this is what we are going to do.
Thank you.
And the Indian iron ore is cheaper than bringing the iron ore from rest of the world.
Thank you. Mr. Nahar, we would request you to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. The next question is from the line of Preet Nagar Sheth from Wealth Financial Advisors. Please go ahead.
Hello.
Yes, please.
Yes. So you mentioned that the kind of EBITDA that we've seen in Q2. Now, given the kind of changes in iron ore that are there, do you think we'll be able to maintain this EBITDA trend in Q3 and Q4?
Yeah, you see, Q3 and Q4, our aim is to further elevate the EBITDA level from 12,600 rupees a ton to maybe more, much more region. We are now very selective in our product mix. So the other point is, number 2, the economy of scale is working very well. And since we are ramping up the production, we are debottlenecking wherever it is possible. So we'll be in a position to maintain the EBITDA on plus side. I do not want to give any number or rosy picture today, but our aim is pretty good, like from 11,700 rupees to 12,600 rupees. We have ramped up in last quarter, Q1 to Q2. So Q2 to Q3, and then finally H1 to H2 will be much higher as per our plan.
Okay. One last question is regarding power. There were some plans to demerge the power division. So can you give any color on that?
There's a good opportunity, then yes, why not? We are looking for a good opportunity, and if it comes our way, we will definitely do it. So giving you a timeline, it may not be possible, but we are looking for a good value for our company. As and when we get it, we will divest.
Thank you. The next question is from the line of Abhijit Mishra from ICICI Securities. Please go ahead.
Yeah, thanks for taking questions. First is on your iron ore mine, which you have won through auction. Sort of understand in a sense that you are pretty sort of confident.
Sorry to interrupt. Mr. Mishra, the audio is not quite clear.
Yeah. Is it clear now?
Yes.
Yeah. So I was saying that given the the issues with the boundaries at Guwahati, I mean, can it create a bigger disruption in the in the area? Because what we are made to understand is that not only the boundary of this mine is sort of off the chart, given that Jatin mines of Nuagaon, which have gone to other competitors, that's also sort of facing an issue. So can it lead to a bigger disruption for an extended period of time? Would love to know your thoughts.
We are actually, first of all, we are concerned about our own business. We do not want to look into others' business. So we are expecting that if government of Odisha, they rectify the coordinates and they rectify the layout and map, then it is worthwhile to do the business. And iron ore, as I told you, in the country is more than 20 billion tons. And barring last few months when it was rainy season, there was some problem and disruptions. But now, and the mining companies, they were they changed hands, and new investors have come at the country, so it was taking some time. But I think over a period of time, in next 2-3 months, things will be streamlined, and there will not be any shortage of iron ore.
Okay. Thanks for this. And second question is on this Rangpur DRI plant. So I don't know whether you have shared this number, but in the quarter gone by, which is Q2, what has been your production rate, and what are the triggers to further improve the cost of production? If you can also highlight the current cost of production profitability from that plant, the ramp-up plans that you have for the next few quarters, that would be great.
Yeah, we are producing DRI at a rate of about 4,000 tons per day, and we are going to ramp it up to 6,000 tons per day very shortly. And the cost of production, when we see DRI of through the conventional sponge iron rotary kilns versus DRI through the coal gasification, as of now, there is an advantage in at 4,000 tons a day. We are at least 5% cheaper than the conventional sponge iron plants. And we generate electricity. Apart from that, we also generate some of the very specialty chemicals from the coal gasification, like tar, phenol, bisphenol, ammonia, and many other items. So we are pretty sure that in times to come, this will be adding to the bottom line further, and will be generating a good EBITDA level.
Abhijit, we would request you to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. Next question is from the line of Ashish Kejriwal from DAM Capital. Please go ahead.
Yeah, hi. Thanks for giving me an opportunity. So, quick 2 questions. One is on Sarda Mines advance payment, which we have done, which was around 1250 crore at the end of FY20. What could be the status now at the end of first half? And secondly, over the last few months, we haven't heard anything about monetization of overseas assets like Botswana or Australian land and other things. So what's the status on that?
Thanks, Ashish. So as you would have seen in our numbers that the advance has gone down by around about 400 crores to 500 crores. And as we procure more material from SMPL, as they mine, it will go down further. As far as divestment of overseas assets is concerned, yes, that is the focus now, to bring down the debt in the overseas entities. If you remember, in FY19 we were at $1.9 billion. As of March, we were at 1.8. If you look at it today, it's just $800 million, which will come further down once we divest more assets. You mentioned Botswana. Yes, Botswana has been there on the block. We're trying to increase the value of Botswana, as we illustrated before, by getting a PPA also. That would help us monetize it at a better value. The earlier deal, which we had signed for $160 million, actually got terminated because the buyer did not pay. Hope that answers your question.
Yeah, thanks. And once again, congratulations on the good set of numbers as well as forward booking of coking coal in this time, which is, I think, encouraging. Thank you, sir.
Thank you. That was the last question. I would now like to hand the conference over to Mr. Sharma for closing comments.
Thank you very much. Thank you, dear investors and organizers. I'm sure whatever your queries were, we have replied very well. In case of any question left, you can always speak to Mr. Nishan, and he'll be pleased to share the information or reply whatever you want to have. The company is doing very well, extremely well, and as I told you that we are at a level of 12,600 rupees of EBITDA, and with 31% gross margin, EBITDA margin. We are the today number one company in the country in our category and capacity, and I'm sure we'll maintain it. We'll be closing this year at about 7.3 to 7.5 million ton. Next year we'll be crossing 8 million ton. This is all because of the product mix and debottlenecking the existing bottlenecks wherever it is there. We are not keen to put any money in the capex except for the routine maintenance or small fill in the blanks wherever it is required. The aim is to bring down the debt level to in the financial year to 2022 to a level about 15,000 crore. We want to reach to 50,000 crore of turnover in 2022-23, and we want to bring the EBITDA level to about 12,000 crores. Perhaps we will be one of the best company in the country and world with our capacity and category when we have EBITDA of about 12,000 crores and the debt level is less than 15,000 crore with a total sales turnover about 50,000 crore. There are not many companies in the country, hardly 29 companies, those who are there in the country having turnover about 50,000 crores today, but all of them, they are not at the same debt to EBITDA level. So our aim is to bring the company to a healthier path, much more healthier path, and our new businesses which are now approved by Government of India, like head hardened rails and 1175 grade of rails, they will bring more EBITDA and more money to the company. And the financially company is getting sounder and better, stronger day by day. We have good manpower. There is no exodus of manpower, and we have a very strong team available at the top management, middle management. There is a complete succession plan. People, those who are going to retire. So the colonies, the townships, that has helped us in running the plant during COVID time. So all of the actions taken by our management in previous years, they have given the dividend. And we are, since our Angul plant is very close to the ports, so we are in a position to move the material to ports as fast as possible. And Indian Railways supporting well in transporting goods in, goods out. There are no issues. So if you see overall, the company is doing extremely well, and we are committed to maintain a very healthy balance sheets in times to come also. And we as you know, we have already done this divestment of Oman, and that has helped us in reducing debt level as a whole, and reaching to 15,000 crore or lower debt by 2022-23 will be a easier walk now. So thank you very much. Thank you for listening. All the best.